Hello and welcome to the Money Mindset. Today I'm going to be talking about the risks associated with buying and holding altcoins. So, the first risk is the security risk. So, a little bit of a background. What is a commodity? A commodity is something neutral, something that cannot be changed, something not issued by government or corporation. Examples are like raw materials such as gold, coffee, aluminum, wheat, corn, things like this. Bitcoin and Ethereum were originally seen as commodities. However, Ethereum now is in a gray area, especially after the FTX collapse. So, we know that Bitcoin is a commodity, but what is a security? The Howey test states that there must be an investment of money. The investment must be made in a common enterprise. The investors are expected to make a profit from their investment, or they expect to make a profit. And any expected profits or returns are due to the actions of a third party or promoter, which means they're due to the actions of the company or the foundation or for whoever's issuing the security. So if a token is deemed a security, the founders must register with the SEC. And the registration process requires founders to disclose a complete description of the business and all risks involved in that business. This includes things such as financial statements, risk disclosures, company management, insider information. Anything that the public needs to know will come out while the security is registered. So altcoins right now, we call them, well, not we, I guess people call them projects, and they use buzzwords like or created by a foundation or backed by the foundation. But really, they're just software created by software companies. They're not projects. These tokens are issued to enrich developers, fund development, pay the foundations. And also line VC's pockets, right? So many tokens like this offer a yield or dividend. So we need to ask ourselves, are altcoins securities? Now, let's look at an example here, the FTT token. FTT token was issued by FTX, which is a company. The price of the FTX token relied solely on the FTX performance and SBF, who is the FTX CEO. FTT investors expected a profit if and only if FTX succeeds. So what does that mean? That means FTT is an unregistered security. Had FTT registered as a security, it would have been a completely different story. Investors would have been protected from the collapse since the business practices at FTX would have been public. All right, so the big question is now, can we use this example from the FTT token and apply it to other altcoins? FTT was quite obvious that it was a security. However, some other coins are more complex and it's harder to see. But I'm sure this example that I'm about to say will help you realize this. So, coins with a foundation behind it are all susceptible to this risk. What would happen to Solana, Cardano, VeChain, Avalanche, Polkadot, Ethereum, etc., all these types of coins, if 1. the foundation decided to stop working on the project, 2. the foundation decides to roll back the chain or stop the chain, 3. the underlying company issuing the token goes bankrupt or the foundation goes bankrupt, and 4. the foundation has to register with the SEC. I'm sorry, but it would be a total disaster. People would see any insider dealings, any pre-sales, anything, any shady business tactics, VCs getting early access to things that the regular public couldn't have access to. There's so many things that would come out of the filing that investors would see, and people would just be running for the exits. There would be just a complete crash. Think about it this way. If, let's say, Charles Hoskinson said, me and my foundation, we're done working on Cardano. We feel like this is a failed project. What do you think would happen to the price? It would go to zero. There's no other explanation here. These are securities, and we need to be very careful. Now let's talk about the issues with initial distributions and proof of stake. All right, let's take a look at this diagram here, which shows a bunch of popular altcoins and their initial allocations, which means how the coins are distributed. So blue is good. Blue is public sale. That's what we want to see. We want to see a lot of blue. And the rest of the colors here, community allocations is green, insiders is red, and foundations is gray. As you can see, most of these coins here, most of their allocations were to insiders, foundations, and other things that are not to the public sale. Look at Binance. That looks very bad. That means the team and the VCs are all getting rich while you guys are getting dumped on. Look at Solana. Look at Solana and try to find the blue, because it doesn't exist. It's so small. This is just terrible. This is garbage. Ethereum's all right, but still 15% went to VCs and insiders. Vitalik is probably laughing right now, selling his ETH. Look at Cardano. Got Charles Hoskinson getting rich. This is ridiculous. Look at the Bitcoin distribution. It's 100% to the community. Bitcoin was the fairest launch. Bitcoin, this is why I say during the bear market, we need to be buying Bitcoin, and then we'll think about alts after. So the problems with the initial distribution and combined with proof of stake is that the pre-miners, the founders, the VCs, the foundation, all the insiders are benefiting greatly at your expense, because you're buying the coins that they already got for free, or they pre-mined, or they got very cheaply, and they're dumping these coins on you. Either they're dumping on you, or they're staking their coins, which is diluting you. They're running validators that you cannot run. You cannot go on to Solana and say you go into Solana, you cannot run a validator. It costs way too much money. You can't run an ETH validator unless you have 32 ETH. But Vitalik can. These big exchanges, these corporations, they're all running validators and you're not. So you're getting diluted. So let's talk a bit about altcoin performance. So, some important things to know. All altcoins will perform worse than Bitcoin in the long run. There has not been a single altcoin that has performed better than Bitcoin, because Bitcoin is on top. So that is true. Some altcoins perform better than Bitcoin in the bull market. Not all, but some. Right now, Bitcoin is down 65% year to date. Cardano, 81%. Solana, 94%. ETH, 68%. DOT, 84%. This just shows in a bear market you're going to get crushed if you hold on to altcoins. So let's talk about some strategies that we can employ to maximize our success with altcoins. What can we do? Well, we know to start, we are not holding these coins right now. We are not holding these coins during a bear market. We're not holding these coins at all. if we're buying these coins, we want to be in and out fast. We care about the money. We don't care about the technology. Look, everyone's out to dump on you, and there's so much risk out there. We just want to buy and sell. We want to get our money and leave. We want to buy at the start of the bull market and sell all the way up. We are not buying these coins now. Just remember, we're following the money. When Bitcoin is strong, that means altcoins will be strong soon. So that's when we invest in altcoins. We don't buy them now. All right, so basically in conclusion, we're not going to get married to altcoins. We're just going to buy them and sell them quickly during a bull market. We're not going to put all of our money in them right now and just let the price bleed away. We'll lose all our money. We're not going to get scammed. We're going to be smart about this. We know that there's lots of risks with altcoins, but risk equals reward. So we're going to be smart about it, and we're going to be careful about it. All right, thanks for watching.